Hey everybody, tonight I'm gonna probably run a little over today. I apologize to the next show. I'll try to only do 1 or 2 minutes over, but we got a late start and there's just some things to say. But let's just jump right in because today has gone from an incredibly boring day when I didn't know what on earth I would talk about to a pretty cool day. So hopping into the charts, we begin with the spider, which made a new recovery high today, but has since turned red. I don't know precisely why, but it seems to me that we've got kind of a sell the news event because the market went gaga hearing rumors that, oh, Trump and Xi talked. Like that's going to solve all our problems. But the market was thrilled and they came and said, we did talk and it went great. We've settled our differences. Things are just peaches and cream. And then the market went, okay, sell everything. So it started dumping out. It's not a huge down day by any stretch, but I mean, the NQ's down 1%. That's a start. And the RTY and the ES are both red. So yeah, red across the board, and the spider's reversing there. I only show this as by way of contrast. This is the RSP, the equally weighted S&P 500 ETF. And interestingly, we got a gap here that did not seal. So that's acting as resistance. And the really interesting aspect is to show in recent times how much the normal S&P, which is heavily weighted to the mega caps, shown in black, has outperformed the equally weighted S&P 500 shown in blue. It's not a small difference. It's a huge difference, like 2x difference. So, Netflix and Meta and Alphabet and Apple, they're all holding things up, whereas the stocks as a whole, yeah, they're up, but like half as much if you really look at it evenly and democratically. So yeah, that's the RISPA versus the spider. The diamonds also down a little bit, and they did not achieve another recovery high. So a bit of a mixed bag in the market right now. Over in emerging market land, EEM pushed a little bit above its own high from back in October. So we've reached levels now that were last seen in February of 2022 in the emerging markets. So a little bit of a win for the smaller markets there. As far as the cubes go, this is particularly interesting. I have been speaking ad nauseum about this trend line. And the lifetime, let's just get rid of this. The lifetime high is this red dash line right there. That's the lifetime high. This is the trend line I've been obsessed with. That goes to the October 26th low. Look what happened today. As we zoom in, an almost perfect touch of that trend line because everything was green and just about perfect kiss on that bottom of the trend line. And now we've got a bearish reversal pattern. That's fine, but let's not put on our party hats until tomorrow because the unemployment report's coming out and that usually has a pretty big effect on the market. So if we get more selling tomorrow, then maybe we can start thinking about putting those party hats on because that would have been a beautiful hag of resistance and a reversal away from it. Microsoft had been and continues to be at a lifetime high, so that helped. Netflix is green, although it's got a shooting star right now. It was rather higher earlier. These have just been of aid to tech stocks in general. Spotify, another lifetime high there. So these have all been contributing to that strength. But, as I say, the NQ's up 1.11% now. And keep an eye on semiconductors. SMH, which I've been speaking of kind of hand in hand. In fact, something that's jumped out at me. Got a bit of an analog here. Check this out. That's interesting. All right. Now it's one of those times I wish it was a 2-hour show. We got a price gap right here. And that price gap, just to be picayune about it, was the 269.35. This was the peak, 269.66. Not bad. It's also the anchor point for our descending trend line. So a beautiful seal of that price gap. Then, interestingly, just a couple of trading days later, we had another price gap, this dashed line. And we've gone ripping toward that. Haven't quite closed it yet. Nowhere is it written, either in the Bible nor in the federal code, that we have to seal the gap. But we've gotten awfully close to it. and that also converges with that descending trend line. So just saying, pretty powerful resistance there. But yeah, I did notice that other gap instance. That is pretty spiffy. Gold is reversing because it seems of the aforementioned Trump-Xi pillow talk. And we've got a lower high on this. So here's our lifetime high, lower high, lower high. So, a very modest diminishment going on with GLD. Silver, on the other hand, is playing catch up to the upside. It burst above this level. It's a new multi-year, very much multi-year, like past 13 years high. And yeah, we've long been fans of silver here. I applaud it. Yay, go silver, go. Poor thing has been just battered versus gold. This is the silver gold ratio chart. So it's having a nice little bounce based on that. I will say, in spite of my enthusiasm, I did short GDX early today because if you look at the the XAU chart, for example, it's very, very close to resistance. We've got a little reversal going on right here. So yeah, I've got 20 positions now. One of them is a short on GDX. Although SKE, which has also been a long idea here on this little segment, is doing well too. Another lifetime high on that one. But yeah, like I said, XAU, hello. Watch those fingers, Tim. XAU was getting very lofty and near what I consider to be resistance. Good heavens. Come back here. Come here. Okay. There we go. There's XAU. That wasn't worth the wait, was it? All right, so there's the chart. You can see it's really close to the edge of the wedge. But the old theme that we're always hitting on here is these long-term ratio charts of precious, of the all world versus precious. So here's all world equities divided by gold, looking very toppy. This is all world equities divided by silver, also looking very toppy. That's just kind of the general theme. XME was also strong earlier today. It sealed its gap. The gap being, let's tune this a bit. Watch this blue line. The gap was right. Let's get it just right. Right there. There's the gap. 64.74. We sneaked above it by a little bitty bit and are reversing away from that. And as I've mentioned, another theme is this XME GDX ratio chart, which suggests that for the long term, XME will badly underperform GDX. Precious metals miners will beat just miners in general. I might not have to step on the next program after all. I've been talking so fast, but I'll do a little Elon speech in a second. That's coming up. Here's USO, which is green, which is a little annoying, but it has not violated the right triangle pattern. This right triangle pattern is the still rules the roost. And, it's just trying day after day after day after day, but that trend line keeps holding back the price. It is doing its job. So today was the highest we've been in a long while, but I got beaten back. At the moment, crude oil's up 0.73% on the front month. Now, let's talk a little bit about Mr. Musk. Those of you who read me on Slope know that, and I for various personal reasons, I take caution when I talk about Elon Musk. I've long been a fan. I wrote a glowing article about Tesla in early 2013, when it was like 1% of what it is today. I raved about the cars. I raved about, and Elon right here in Palo Alto built his first company. Tesla's here in Palo Alto. XAI is here in Palo Alto. I'm a fan. I found it a little regrettable, his foray into politics. But when he made that decision, I made a couple of three predictions. One prediction was he ain't going to save $2 trillion. And he didn't. I mean, at best, the amount possibly saved is maybe tens of billions, if not singles of billions, and that would be completely subsumed by all the new expenses. So that was one prediction. Not a hard prediction to make. Another prediction was that he will rapidly grow weary of the government because This is a man used to, and he says X, and X gets done. That's what it is when you run a company. People either do what you say, or there's the door. When you go into something like the federal government, it ain't that way. And I figured that he would grow quite tired of just the morass that is the federal government. Also, not a really hard prediction to make, and also a prediction that very much came true. I figured he wouldn't make it past spring. And by the end of April, it was clear he was like, I'm out of here. Following that, the prediction made, which I thought was a little more speculative, was he and Trump are going to hate each other, and they're going to slam each other, and they're going to say nasty things about each other. And I gave myself some leeway here. I figured that's going to happen before summer's out. As much, they did the press conference just a few days ago. Love, love, love. I love this man. Here's the key to the city, etc. Love, love, love. So I figured, give it a few months. There can be no love left. It took hours. And today it's gone. What does it have to do with stocks? It has a lot to do with stocks. You don't believe me? Take a look at TSLA enter, and you'll see. So that war is gotten hot real fast. And here is Tesla stock. And as we zoom in, it is getting fricasseed. It's down about 16% today. And I'm confident that about 100% of the reason is because Trump is slamming Elon left, right, and sideways. Because SpaceX, Tesla, these are companies that benefit from government contracts. So people are kind of freaking out that this war is taking place. And Elon's taking it to the extent of maybe I'll form a new political party. So have your Coke and popcorn ready, because it's getting real interesting real fast. So, hey, 3 for 3, but a lot sooner than I ever guessed. And no, I did not take advantage of this with some Tesla trade. I'm a chartist at heart. I try to base my decisions on charts, and there was nothing particularly about the chart that screamed short this sucker. But for those who did, congratulations, because wow. Adjunct to that, other electric companies, which have done quite poorly compared to Tesla, continue to do their usual shtick of, hey, we're going up. No, we're not. So there's Rivian, which is slumped again, and Lucid, which is near lifetime lows. So pretty dreadful stuff there. As a complete change of subject, and I'm just about to the end of the program here, PVH was one of these stocks I mentioned from time to time as having a good history of topping out. Bang, 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 bang. Here's the latest bang. Today down about 18%. So history repeating itself there. But getting back to one of those broad themes, and this is the last chart I wanted to share. Here's our old spider versus TLT chart. Equities versus bonds. It's a wedge. It is a fantastic wedge. And that sucker's broken. And we're back to the clinging that blue line, which I dare say will be released in short order. So anyway, yeah, you never know what the day's going to bring, because this day began, it was just like, ugh, boring. And then it got really interesting again. So we'll see what tomorrow's like. Jobs report should be a big one. And we'll see if all the resistance stuff we've been talking about matters at all. So thanks for joining me.